Perfect. Perfect. Okay. It's 10:04. I'm pretty sure there's going to be a couple other people that join us, but we'll start because there is a lot of news to kind of go over from last week. Good morning. I hope you all had a great weekend. Happy Monday. Excited for another week. It's the end of the first month of 2023 already. So we got 11 more to go. PCE, which is personal consumption expenditure. And that's really the Fed's, what the Fed is looking at when they're talking about inflation, right? Remember, CPI is really just a headline number for the media, but it's because it's typically bigger than a bigger number than the PCE, but the one that really needs to hit that 2% mark that the Fed wants is PCE. It was up 0.1% in December, but came down year over year 5.5% from 5.5% to 5%. So we're seeing big chunks being taken out of inflation, which is a good sign. I know that the Fed's meeting is on Wednesday this week, and they're thinking about increasing by 25 basis points. The market already kind of knows that. So barring any sort of surprise, we should be at, they should be increasing their Fed funds rate another 25 basis points. I believe core PCE, which strips out a lot of the extra stuff, is at 4 or 3 and 3 point something or 4%, which is the core PCE. So we're getting much, much closer to that 2% mark for the Fed. Their next meeting is going to be in March, and that may be the last time they hike rates, depending on the news that we get from February at that time. Pending home sales rose for the first time in 6 months in December, which is actually a bit surprising. Let me pull it up here. Pending home sales. So it's actually a bit surprising considering that typically December is a slow month for the industry, right? Those are contracts that really close in January, February. We know that January and February in terms of transactions are typically pretty slow. So it's a good thing to kind of see that bounce, especially in such a weird month. They did rise 2.5% month over month, and we're now down 33.8% year over year on pending homes, specifically, which are existing home sales, right? Homes that are already built. But we did get also new home sales the day before that, which is basically new construction loans, right? And so you'll see here that we also increased a little bit from November to December. I believe that number is 2.3%. Oh yeah, it's right here. 2.3% month over month. We're still down 26.6% year over year on new home sales, but you're kind of seeing how rate driven the market is because of the volatility we've seen. I mean, once rates kind of stabilize, that's when we're going to kind of consider this to be a little bit of a normal market, right? But right now, it's just kind of a reaction upon reaction upon reaction. We know that consumers usually adapt once things kind of get back to normal. And we're kind of seeing that now. Remember that number 5 has been the number that everybody's been waiting for in terms of interest rates, and we're right there around the corner. So now you're starting to see people kind of go out and actually sign contracts. And like I said, the biggest surprise on this is the fact that it was in December, but doesn't mean that we can already start considering that we've seen the bottom, because we just kind of, I mean, technically from September, right, or July, 543, 550. We could have already seen the bottom as we continue to increase, but we don't know that. Let's kind of see what happens in January and February before we start calling that. You're going to see here 616,000 signed contracts. Doesn't mean that there's 616,000 new homes that were already built. That would pretty much put us at about a year's supply of homes. Realistically, only 71,000 homes are actually complete in December, and that's about a 1.4 month supply. So all the other people, they're kind of waiting for their homes to either be built or they're currently under construction, which is basically shows us how healthy the housing market is, right? Because these builders are basically not building unless they actually have money in escrows. The initial reading for Q4 GDP came in at 2.9%. Which is very strong for the economy, but with personal spending declining in November, December, and a weak holiday season, stores may consider lowering prices on items moving forward. Let me get this. on items moving forward. And that could affect us in Q1 and Q2 GDP. And for those of you who don't know, GDP is gross domestic product. It's basically how we measure how well or unwell our economy is doing, right? And then initial jobless claims came in lower again. Pull this up just the right week. Yeah, came in low again this week, but continuing claims are still increasing. So you see here, initial claims came in at 186, a dip from last week. The 4-week average is now below 200,000. Initial jobless claims are people that are applying for unemployment for the first time. And so those numbers are dipping, but continuing claims are continuing to increase, and they've increased about 400,000 in the past 4 months. Reason being is because from what the Bureau of Labor Statistics says is that instead of outright cutting people, jobs are basically lowering people's hours instead of just completely letting them go or even lowering their wages. But once you are pretty much let go, it's becoming much, much harder for you to find a job, which is why you're staying on unemployment for much, much longer. Okay. And then lastly, which actually I shouldn't stop sharing my screen, but lastly, we're going to talk about Miami-Dade Housing Finance Authority. So last week, they did increase their down payment assistance amount from $10,000 to $15,000. All right, you'll see it here, up to $15,000. It is specifically for Miami-Dade, kind of similar to MDEET in the sense of those two are specifically for Miami-Dade County. The good thing, the pros that come from this, right, is it's in-house underwriting, meaning that we do it, we close this thing in a timely fashion. You need it in 21, 28, 30 days, whatever the case is, because everything is done in-house. You'll see here, same thing as the Florida Bond and as Hometown Heroes, they have their own specific lock rates and they have their own minimum FICO. So if we're doing FHA, that minimum FICO is 660, and anything else, the minimum FICO is 640. But I typically just tell people 660. Most of the people that are in this program are doing FHA, right? So just consider that 660 minimum FICO, 0% 30-year deferred. So this is a loan, right? It's not a grant. That's the difference between MDEET. MDEET is forgivable money. This is a loan. You will have to pay it back, but it is 0%, meaning that whether it takes you 5 years, 10 years, 15 years to either refinance or sell that property, you're not going to pay more than what you borrow, right? If you got $15,000 5 years ago, you're going to pay $15,000 back whenever you do that, okay? Some of the guidelines, which I did have them. I think it's not letting me. Oh, let's do this. So some of the guidelines that I did have up that I knew you guys were going to pretty much ask about is income limits and purchase price limits, right? So income limits, targeted areas and non-targeted areas. Okay, non-targeted areas is basically, I would say 99% of where we're going to be looking. The targeted areas is about 1%. Those are, special low income areas that are based off of specific census tracts that you'll see here all throughout Miami-Dade County. And so in order for you guys not to get caught up, just consider the numbers at non-targeted. It just makes it much easier, because if not, you're going to go crazy trying to figure out how to kind of fit into that bucket. Now, if it comes to a point where we're right there and you say, hey, we really need this property to work for whatever reason, can we check if it's targeted area? I could send you guys this link, and then that way you guys can kind of look at it yourself. All you have to do is just type in the address, and it'll tell you if it's within any of these census tracts or what census tract it's in, and then you can kind of correlate it with the census tract. Don't do that to yourself. I promise you, you're gonna go crazy trying to find the right home in the right census tract, because these are not based off of addresses. So it's not easy for you to say, okay, this specific area, or let's say, only in, this census tract is specifically for Opa-locka. No, there's specific areas within Opa-locka that have these census tracts. So it's in specific subdivisions. It's going to get confusing for you. Just look at the worst case scenario numbers. It's much easier. So when we're talking about 1 to 2 person household, 97,500. Here's another thing that is kind of different from MDEET or from other down payment assistance programs, is the fact that they use 1003 qualifying income. So even if that client does make $100,000 with overtime and bonuses and things like that, we don't necessarily need to use it. If we can qualify them off of their base pay, and their base pay is, let's say, 80,000, and the other 20 is from overtime and bonuses, and we don't need it to qualify them, we don't use it, and they'll still fall below that 97,500. So we basically can get creative with the income because they only use whatever we put on that 1003. Unlike other down payment assistance programs, where they'll look at the actual household income for the whole family, and sometimes that catches you off guard, right? Because in South Florida, a lot of people, what they'll do is they work W-2, and then they may have gotten one 1099 from one thing that they did for $500, and they use that 1099 to write off a lot of losses. And so even though they may make $80,000 W-2, they showed negative $15,000, $20,000 in 1099. That's what they're going to use in terms of qualifying income for you, right? So now you're using 60,000 as opposed to 80, and you have to, if the tax returns are in the file, the underwriter's going to have to use that negative income. It's not like the underwriter can look at it and say, well, no, I can't use it. No, if that client is still doing that 1099 work, they have to consider that. So it's a good thing that we only go with basically 1003 qualifying income on this. 3 or more person households, it's going to be 112, 125, and then of course 80% area median income and below. And then the sales price limit, just think 382, 194 is what you're going to be looking at. Like I told you guys, targeted areas, few, far in between, very, very rare. And if you just hone in on those specific areas, you're going to drive yourself nuts. 1 to 4 units, new or existing, condos, townhomes, pretty much any properties that fall within these limits. Now, unlike regular standing conforming loan limits, right, where if you go from a 1 unit to a 2 unit, that sales price can increase. That's not the case here. They do not have increasing limits for higher or for more unit properties. So don't consider duplex, triplex, quadplex unless you're going to find one within that 382, 194 bracket, which is very, very rare. Okay. Do you guys have any questions on the down payment assistance? On anything for today for the most part?
Hey, Mike, does that down payment assistance also work for mobile homes?
That's a good question. Should manufactured homes, mobile, recreational, seasonal, or other type of vacation or non-permanent homes are not permitted? So no.
Thanks.
No problem.
You said you were going to send out the link for this, Mike?
You want me to send you the targeted area link?
Yes.
Or you're talking about just the link for the guidelines and stuff like that?
The link for the guidelines.
Okay. Yeah. So that's on eHousing Plus. That's where we go for with the bond and everything like that. I'll write it now in the chat. Just another thing, guys, let me write it here really quick. eHousingPlus.com. Okay. So compared to the bond, the reason why this one may be a little bit better than the bond one that we do offer, because remember, before this one was on and off. I actually closed on this one in 2021, was one of the first deals I did with Lorraine Simone. She's usually in these meetings with us, and it worked fantastic. The client needed about 15,000 cash to close at that time, and that's with $10,000 down payment assistance. So clients are going to need around 11,000. I would say shoot up a little bit, 12, most likely less than that on average on these. So that's going to be beneficial for them because they're not going to need too much saved. The difference between this one and the bond that I like is the fact that the rates are lower than the bond. So if we come here, actually, we'll just go to Florida Housing. All right. Because Hometown Heroes obviously is employment specific. The other option we had was the bond. So it gives you up to 10,000. Oh, look at that. They actually lowered their lock rate. So this one may be more benefit. The bond is a little bit better in terms of rate for FHA. Maybe not so much for conventional. So that would be something that we can kind of decide. But obviously, you get much less money. You know, if that client really only has $10,000, $11,000, the Miami-Dade one's going to be the best option for them. And then the bond, the difference between the bond and the HFA is the bond does use household income. So we always have to kind of be aware of that when we're talking to clients, right? About the biggest thing that I catch a lot is that Schedule C income, right? Where they basically have a contracted job that they don't necessarily work. That's not their thing. They don't know how to file their taxes, so they just file losses so they can get more returns back. around this time, and kind of hurts them, right? Because now when we're trying to buy a property, a lot of times when you're W-2, you don't necessarily need that income, correct? Because we're only doing W-2, but now if we're talking about down payment assistance, we have to include that in there. So this kind of circumvents that. You guys have any other questions? No, that's it. Easy Monday. Well, it was, is she in here or did she leave? Oh yes, Nikki's here. Nicolette White's birthday was over the weekend, everybody. I believe it was on yesterday.
Yesterday, yes.
Happy birthday, Nick.
Thank you. It was awesome. I literally not too long ago woke up. I was like, I cannot miss this call. No. Thank you,
Happy
guys.
birthday. Mine's is next week, Wednesday. So,
Whoop, whoop.
yeah. All righty, everybody. Thank you so much. Have a great week. If you guys have any questions for us at all, don't hesitate to reach out to us. And that's pretty much it.
Thanks, Mike.
No problem.
Thanks, Mike. I'm gonna be calling you in a few minutes.
Okay. All right. Not a
Thanks.
problem.
Okay.
All righty.